Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going out there? It's October 16th. I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. I'm going to get real with you today. Share a personal story with you. If you're a millennial, listen up. You know what? Even if you're 40, 50 years old, you should also listen up since this is relevant to you as well. So my mom is 76 years old. She has diabetes and also COPD. That's from smoking. She quit over 30 years ago. She's active, has tons of friends, and really amazing person. I'm really close to my mom. She's great. But what's so amazing about her is she's always a fighter. I mean, even when we lost my dad and her husband, when a lot of people lose their spouse, especially when they're married for 20, 30 years, sometimes, they can go into a little bit of depression and go into a little, which happens, which is normal. But sometimes you see people go through life with little interest. It's such a shock. Again, that happens often with couples who are together for 20, 30 years, like my parents were. And my mom just, she just kept plugging along, kept living. She moved down to Florida about 3 years ago to be closer to me and my family. She lives in a community where she's now the welcome person in the community. So greeting all new homeowners that come in, showing them the ropes in Florida, even though she's been here for something like 3-4 years, whatever. So she has tons of friends. She goes to the movies with them, to dinner, to plays. I mean, it's funny because when I call her, she's probably more busy than I am. She's always out and doing things. And I love that. I'm happy that she's able to move on. She never met another guy after my dad, which, all of us would have been okay with, we get, my brother, sister, and me, that's what I'm talking about. But, she's really living life to the fullest, and I respect that. Now, 3 weeks ago, just before my hip replacement surgery, she asked me to go to the doctor with her, and she had 2 really bad hernias, and a doctor was looking to operate on her. So she wanted a second opinion. Said, Frank, can you talk to the doctor? Let me know, what you think and everything. And, she started having pain, and hernias come in all forms and sizes. Basically, it's like a rip in your stomach that holds your intestines in, and your intestines could pour out of it. And that's what happened. Like she had, it's her intestines like pushing out a little bit because, it just got it was pretty bad. I mean, to the point where it was visible, you saw it, and it was 2 different hernias. So again, very noticeable. You can see them coming out of the belly. One was on the lower left side and the other was on the right-hand side. Now, when you look at hernia surgeries, they usually 45 minutes long. Since it's 2, she's a little bit older. Doc said, it could take around 3.5 hours, depending, because once you go in it, you have no idea. Like you could use robotics and invasive surgery, but you have no idea when you go in, depending on what's in there. You got to put it back in place. Some things may break. There may be whatever. So he did warn it could be worse than expected if they do the surgery. It could take a little bit longer, but the only way he's going to know is after, they open her up. So 10 days ago, and this is on Monday, she went into surgery and had major complications. So our doc said he sewed up one of the hernias, didn't like the way it looked, so we did it again. He saw some damage to a colon where he cut out like the bad area, had to sew the rest. So we're talking about 3 different areas that with surgery. And it took him over 7 hours to complete the surgery. 7 hours, which is insane considering my mom's age. So after the surgery, she went into a regular room and then started to have major complications. So she was breathing heavy, had extreme pain, which is normal, but her blood pressure crashed. And the results were her kidneys started to fail. So they immediately put her in ICU, and she's been in ICU for the last 9 days in ICU. Now, I hope most of you are not familiar with ICUs in hospitals. It's a morbid place. A lot of people don't make it. The care is nonstop, so you get 0 sleep. They come in every hour. But it's also tough because you're walking through the waiting room, and there's usually a lot of people there because I've been going there for 9 days. And they're hugging and crying, and it's just not a fun place. Now, my mom's health got really bad. They have her on several machines now, which includes a breathing machine, dialysis. It's a kidney stopped working. They prick her finger like every 2 hours, check her diabetes. She has direct lines going right into her chest and stomach. to inject medicine directly into the bloodstream. So not just IVs, but directly, like close to the heart. They put things in there just in case, because her blood pressure dropped tremendously, and then it was really, really high. So they need to inject medicine that would be even quicker than an IV, believe it or not. So it almost it's pretty close to the heart. So they also have to give an insulin shot several times a day. She's not eating food other through IV, and she hasn't done any exercise. They just starting to get her up a little bit now, but they were supposed to, with a hernia surgery, again, she had 2, but they say after hernia surgery, they want to get you up and walking that day, and it's usually a 24-hour period, and you leave the hospital. Now, you guys know me. I mean, I like when things are chaotic. Yeah, it's business or whatever, not when it's related to my family. I love running a company where, there's always deadlines, problems that need to be fixed, making revenue numbers, doing like 20 things at work at once. I love that life. I mean, I almost procrastinate to get more busy. I don't know, maybe it's the New York in me, but I kind of like that. I love it. But when it comes to my family, where dealing with so much shit lately, right? I mean, you guys are like family. I tell you personal stories. My wife is a breast cancer survivor. My daughter has Crohn's. Recently needed another colonoscopy. And she's 9. She's taking medicine every day at 9 years old. And now my mom, you're strong, but man, it's not the easiest thing to handle. And when I look at my dad who passed, that was not easy, but at least I had time to prepare, right? I spent 2 years learning everything about his business, asking him millions of questions, pushing around a wheelchair. I treasured that time with him. And that's what I remember the most today when I think about him. But with cancer, and he had a really bad form. It was non-small cell. Writing was on the wall. It was just a matter of time. Again, not easy, but at least you could try to prepare yourself. But with my mom, this is supposed to be a bang surgery. I never thought in a million years they're going to open up a 76-year-old lady with diabetes and COPD for 7 freaking hours. Or I probably would have talked her out of the surgery. Or maybe just told the doc, hey, you know what? Why don't you do one hernia now? I know she's old. And then maybe the other next year, if everything turns out okay, or do the worst one now. But I don't want to play Monday morning quarterback here. But it's extremely frustrating because it was a huge surprise. Again, bang surgery. I didn't see this happening. And for me, when I look at it, I still want to take my mom to places like St. Augustine and Vegas, which, I've done before, and I was hoping she would be there. And I'm not saying that it's she's getting slightly better, but still on a lot of machines. But when I look at, for me, thinking about it now is I was hoping she would be there when we have our first Curzio Research Conference one day. And I think she would have loved that, given our family history in the newsletter industry. My late dad started his own company, operated for 30 years. I mean, I think she would have been really proud to see something like that. Again, my mom's doing slightly better. And I've been at the hospital every night for the last 9 days from 7 to midnight. I'm taking the late shifts while my brother and my sister are there. We like to have someone there for her just in case. She had trouble talking, and now she's talking a little bit more. But we could tell the doctor, hey, could you give her a little bit of pain medication or give her this or give her that, where, the ICU is crazy. I mean, you cold blue, which means it's just very, very, I don't know if that's the same across all hospitals, but in this hospital, it means, someone's in a lot of trouble. You hear that a lot. It's an ICU. Again, it's just a morbid place. And she's still in there. And everything that they're giving to her to help her impacts something else in a negative way. For example, she was given steroids to help her breathe, but that raised her white blood cell count, which in turn is hurting her gallbladder. So they had to stop. She had trouble breathing again. They gave her new medicine, which unfortunately lowered her blood pressure significantly, which resulted in her kidneys shutting down. That's why she was on dialysis. She was on full dialysis. Now it's like 3 a week dialysis. Now they think there's bleeding from one of the surgeries, and it may be an infection, which we're just learning about, but the communication hasn't been too great either. They're trying to find it, and they're saying everything's coming back okay, but she is in a ton of pain, which could be expected in surgery, but it's really tight where I don't know what was really done in there. And when I look at everything, she hasn't eaten, she hasn't walked around, a lot of pain, and now she's getting super depressed because she's in freaking ICU for 9 days. I don't blame her. And I've been very positive with her. Joking around, telling her that, hey, I'm going to show you house to new tenants just in case. And based on a will, I was like, if you give me a car, make sure you have gas in it. I have a great relationship with my mom. We joke around. I make her laugh. She makes her laugh. Just trying to keep her in good spirits, And I really want her out of the ICU. hopefully up and walking again and eating regular food. She did last night that I was with her was probably the best night so far. She had color in her face. Things were getting, mildly better. But again, she's not out of the woods. She's still on machines, and they still really don't know. Like, hey, why is her blood pressure spiking and not spiking? Why is her different levels, the white blood cell count increasing tremendously and then not? Like, things are just happening out of nowhere, and it's hard to take her off everything because if one of these things, blood pressure drops, it goes high. At her age, it could be very, very serious. So, they keep it on these machines. Hopefully she's out of ICU. Now, I'm not telling you this story to feel sorry for me. I mean, everybody has issues, right? Some have kids that are sick. Some have parents or other family members that are not doing well. Some struggle to make ends meet financially. We all have problems. I'm telling you a story for another reason. If you have a chance to hang out with your parents, maybe it's going fishing or watching a football game with your dad, you're taking your mom to one of her favorite places, which may be a play or dinner, whatever, make the effort to do it. Because right now, this is the shit you think about when your parents get sick, at least what I'm thinking about. I wish I hung out with her a little bit more. I wish I had more time. And she may come out of this. She's a fighter. But I truly don't know if I'm going to have that opportunity since she has a lot going on. And I know for most people, especially when you're younger, it's more fun to hang out with your friends, have a few beers, go see a football or baseball game. If you're a mother, have wine night with the mothers, whatever it is. So, it might not be a priority to hang out with your mom and dad one-on-one. But trust me, it's a huge deal to them. Your parents want to spend time with you. They want to hang out with you. I mean, I'm hoping my daughters want to hang out with me in their 30s and 40s. I'm sure they're not going to because they're going to have a busy schedule like I have now. They're going to have their own kids. It's going to be crazy. I hope they put a little time aside for their dad because I always will be there for them. More important, I love hanging out with my kids. And they're going to be much bigger then. But when you look at it, it's not about you and how you feel. It's about your parents, right? It's about your family, which at the end of the day is the most important thing in all of our lives. I mean, it's the reason why we work so hard, so our kids will have a better living than us. It's the reason why we complain about the holidays, but at the end of the day, it's pretty cool because you get to spend time with family members that you might not see. But our lives and everything we do revolves around our families. And if they don't, if you're one of those people that, forget I'm alone or whatever, chances are you're going to live a lonely life. But you want to be on your deathbed at 70 years old and have nobody there to hold your hand? And wouldn't it be cool to have all your grandchildren around in your bed where you could look around and appreciate your accomplishments and say goodbye the right way? To me, that's pretty cool. That's a perfect way to pass. Now, you guys know me. I said this earlier. I'm the most optimistic person you'll ever meet. I try to find the good in every situation. So I'm optimistic my mom will recover. She's a fighter. She's not ready to give up. And of course, I hope she makes it because you get to that age, and for me, I'm 47, but it could be 40, 50, even 60, where I don't have grandparents. My dad passed at a young age. So I have my mom, and now she's pretty sick. And I'm definitely not ready to let her go yet. So I know you listen to Wall Street Unplugged to get new ideas, honest advice about what's really going on with the markets. I try to be right all the time. I would love to get you guys make so much money for you, but you know the business. It's impossible to be right all the time. I want to be right more times than we're wrong. But forget financials for just a minute. Because the best advice I could give you is try to spend more time with your parents. You just go to the house to watch a movie or TV show. Trust me, it is such a big deal to them. And also, after you do it, when you're driving home and you're coming home, it's really going to make you feel good. And that's the message I want to come out with. So hopefully you guys say a couple prayers for my mom. Slightly better, not out of the woods yet. Yesterday when I was there was by far the best night. A couple of nights, they actually said, you may want to get your things in order. My sister said, "Boy, just shut up. We don't have to get things in order." My mom was a fighter. And now she's doing better, but still there's lots of things going wrong where they gotta keep the machines on. She's been ICU. I mean, how many people ICU for 9 days, a long time. And hopefully she gets out of there and gets into a regular room. But yeah, I appreciate it if, say prayers and everything. But more important with this message, we talk about financials. We're going to cover financials. I know what this podcast is about. But the best advice I can give you is not financial related. It's, you know what? Try to hang out with your parents a little bit. Because when you're in a position like me, the things that you think about is, man, I wish I could have hung out a little longer. I wish I could have made time to go, on a trip with her or just hang out and stuff like that. And your parents aren't going to be around forever. So you should treasure that moment. Let's move on. As you know, it's been a busy week for me. I actually teased a guest and said, hey, I'm going to have a guest this week that's one of my by far greatest guest that I've had. Popular guest when I used to do the podcast at the Street. Lost touch and just got in touch with him. I'll give you the name. It's Dan Fitzpatrick. However, because of everything going on last week, he would have been able to do the podcast, but I really couldn't get in touch with him. I've been off the grid for the past 7 days with my mom and stuff like that. So he's away this week. It was like a Tuesday. So he said he's probably going to do next week, if not definitely the following week. So I know I teased that and people were excited because I got so many emails saying, it's Dan Fitzpatrick, isn't it? Which I love, which means you've been listening to my podcast for over 10 years, right? In a place where everybody has a podcast now. When we were doing it, people were like, what is a podcast? The first 5 years that I did it. But he's going to come on shortly. We're going to have a lot of great guests coming on. But this week, it's awesome because I reached out to Andrew Horowitz. He's the founder of Horowitz and Company Money Management, Disciplined Investor Podcast. I love having him on every quarter. So more important, Andrew and I have, since his podcast he's been doing for about 6 months longer than me, a little bit longer than me. So he's the real pioneer in the industry and when it comes to financial podcasts. But we always have this summer impact like, hey, if you get stuck, you're in a bind. And, I really wasn't into, business, especially the past 5 days, we're able to call each other and say, hey, man, you want to come on? And it's not that we're mailing it in, but we're able to talk about all the markets, everything that's going on, and earnings season, trade. Andrew has strong opinions about it. This is going to be a fantastic interview. It's going to be a long interview as well. Not typical 20, 25 minutes, even longer, because we're going to cover the economy, earnings season, trade deal. We go back and forth. We have different opinions on this. You're going to get lots of ideas. Going to go over the ideas he recommended last podcast he was on not too long ago. And also, he's going to share 2 ideas. One of them is going to surprise the hell out of you. It's to short a major company that no one in their right mind would say they would short right now, which I'm surprised. So it's going to be a fantastic, fantastic interview. Lots of information. Get your pen, paper out, whatever you need to do. It's going to come out. A lot of recommendations, really cool stuff. And you know what? Let's get to that interview right now. Andrew Horowitz, thanks so much for coming back on the podcast, bud.
Well, thanks for inviting me. Always a pleasure to spend some time with you. Quality time.
Quality time. A lot going on, right? So I want to start with the economy. And I like talking about the economy because, especially with you, because we try to make it as interesting as possible. When you talk about bell curves or you fall asleep, I mean, it's real life, right? It's buying milk, buying a car, your house, what you're seeing outside, tuition costs. I mean, all of this is factored in. And I want to start off with this subject because there's a lot going on if you look at the data. IMF downgrades global growth to 3%, lowest since 2008, 2009, which is a note that you sent me, which is pretty interesting. You look at the U.S., you have manufacturing was really weak, GDP slowing. Now we had retail sales come out, which were bad. I mean, you can't say, well, it wasn't X this and X. I mean, spending was weak almost across the board, building materials, hobbies. But the biggest surprise for me was online purchases were weaker than expected. When have online purchases been? Never. That's been a secular growing trend for such a long time. But this is fantastic news, right? Because it gives the Fed and basically every other central bank around the world the green light to lower rates aggressively, right? So is this being taken as a positive or negative? What are your thoughts?
I mean, everything has spin. Everything has spin. You look at the IMF number. Last night when the IMF number came out and showed that the global growth was slowing down to about 3%, which doesn't sound like it's too bad. But when you factor in a lot of the emerging markets in there, it's bad because they're growing at a much greater clip. Developed markets, of course, are much slower. But there was some spin. The spin was, and I heard this on I think it was in CNBC last night. It's good. It's good news. I'd love when the IMF downgrades to these kind of levels because it tells me we're at a bottom. And it's a great contrarian play. And I'm like, oh my God, is it, so when the IMF upgrades global growth, it's good. And when IMF downgrades global growth, it's good. And this is a real problem. And that's what you're talking about when you start about, it can be boring discussing economics, but the reality is you have to spend a little time understanding where you're getting your information from and try your best as an individual investor and professional to step back for a second and say, okay, what does this really mean? The IMF downgrading global growth to 3%, which is usually a positive organization. They're trying to, of course, have a good global growth situation. That's their goal. It's not good that they're downgrading it like this. So that's number one. Is it something terrible? Are things going to keep on going the same direction? Well, not necessarily. They are also saying that next year is going to be a bit higher, I think 3.2% or so. But again, that's their optimistic view on things. Retail sales were expected to come in at plus 0.3% change, came in at negative 0.3% change.
How big of a deal is that? Because when people see that number, they're like, it's a point this, point that. But how big of a deal is that?
It's a big deal because, first of all, there's a miss that was pretty substantial. Secondly, the real crux of the matter with this particular data point is that for a long time now, there's been a lot of people saying, you know what? The good news is that the consumer is strong. The good news is there's good employment, and we're seeing that we have some wage growth. We're seeing that optimism and consumer sentiment is relatively high. And the bottom line is that we are a consumer-driven country, and therefore everybody's been hanging their hat on the idea that, hey, the consumer being strong, so we're in a manufacturing recession. Service is slowing down a little bit. Okay, fine. Inventory builds not as much, and you kind of go through all the different gyrations of what's out there. And it doesn't really matter, they said, because the consumer's strong. Now we start seeing that there is, even though there's one data point, 1 month, but this is now coinciding with the rest of the slowdown. So there is a confirmation that whether this is a weak patch or something more is yet to be seen. But it is important to understand that, yes, this is, consumers are either one of two things. Either they bought a lot for some reason into this and don't need anything further, slowed down their purchases, or they're concerned about something and are pulling back and saying, you know what, maybe I don't need all these extra products, even though there's a lot more people working right now, even though wages are higher, there's much more money in people's pockets, consumer sentiment's high. It is a real big issue because that's the one thing that everybody was holding out as the consumer, the backbone of our economy is still strong. And this is not showing that.
Well, let me ask you this, because, I just highlighted a couple of weak data points, but let's go to some of the positives, which you mentioned. We have super low unemployment. We do have a little bit of wage growth. Housing data has been positive last couple of months with rates coming down, which could be expected, refinancing and stuff like that. But does all of this really matter? Because when I look at the Fed, and I said this because everyone's looking at the economy, we know they look at inflation and CPI, but I'm being serious. People, and that's how we're programmed to look at the economy. They're lowering rates no matter what. I mean, don't they have to lower rates no matter what? Considering where you're looking at where corporate yields are, you're looking at the rest of the world lowering. I mean, to be more competitive, we almost have to lower rates, regardless of what's going on, unless we see that CPI really take off 2.5%, 3%, 4%, whatever. Then you'll definitely get everyone out there saying, okay, we need to slow down. But there hasn't been a hint of inflation since we've been easing, since the world's been easing, which kind of caught 99.9% of people off guard. They know we had runaway inflation, gold, all this stuff, but we haven't really had that. So for me, when I look at all the data, does this really matter? Because it's pretty clear that the Fed's probably going to lower rates, or it's most likely going to lower. It's even priced in that they're going to 1% at least over the next 6 months heading into election year, right?
Here's your answer. It will matter when it matters. In other words, right now, this seriously, right?
No, I know. It's
gonna, everybody's gonna make up all sorts of excuses, say that we have the backing of the Fed, say that we have a lower tax structure, that we're gonna have. So there's a lot of hope trade going on right now. We have the hope of a tariff deal, of some kind of deal with China coming through. We have the hope that the Fed will have our back, reducing rates. We have the hope that earnings will outpace the lowered and low bar estimates that analysts are putting out there. We have the hope that the consumer will hold up and continue to do what they do. We have the hope that there's going to be, there's no repercussions due to negative interest rates. All of this, and hope, let me also say, hope that there's a Brexit deal that will happen by the end of this month. A lot of hope out there. When does that hope break? Well, probably when we see a reversal in the job trends. That will be a big one, if that happens. If the stock market starts to come down, I mean, there is only so much that the Fed can do or central banks can do to keep stocks higher. Even though lower rates do provide for a better valuation point where you can extend valuations on stocks for a bit higher with lower rates. I mean, it's not good. Let's just step back for a second. It's not good that we have to lower rates. Would you agree with that?
Yes, I would agree with that. Yeah.
It's not good that on top of all this, we have mountains, piles of debt.
Which makes lowering rates expected, even more expected, right?
Right, of course. No,
we don't have to make those big interest payments. That's why we've heard about the debt story since the 70s, 80s, 90s. It's going to kill us. Markets, it's the biggest secular trend ever, the S&P 500, near its highs. But, as long as interest rates are low, right? I mean, that's another reason why they probably need to go lower.
Well, we're looking like we're going towards MMT, modern monetary policy, modern monetary theory, which is this whole idea that we can sustain growth with extraordinary amounts of debt, which is exactly opposite of what we've known for the last 100 so years. But now all of a sudden we have this idea that, hey, high debt isn't a problem as long as rates are low. Meanwhile, we have corporate debt that's out of control. right? We have the most amount of corporate
the oil industry. There's a reason why the whole industry is crashing. They pushed out that debt when all prices crashed, right? Like 15, 16, 40, 50, 16. And now they restructured the debt, pushed it out. Now it's coming due. But you're seeing the oil companies getting crushed right now because of those debt levels. So, yeah, just bringing up a good point to that. Yep.
Right. And even though interest rates are low, what the problem is going to be that even though interest rates are low, we still have the debt services that have to be paid on a higher amount of debt outstanding. Therefore, we have to either eventually raise taxes, have earnings and better sales, depending on if it's corporate or government side. And, all of this is this kind of thing that, okay, we have it going. But when that does, in fact, break, and right, Frank, the thing right now, everybody's thinking we've broke the economic cycle. The whole peak to trough to peak, recession to expansion, it's dead. The Fed somehow, through negative interest rates and through lower interest rates and through quantitative easing and various different tools that they have obliterated the economic cycle. And if they have done so, by the way, miraculously, it's only over the last 10 years, because that's the only time we haven't seen a recession since, right?
Yeah, I mean, it's been a while. It's been a bull market. I mean, you could say, well, it was broken from September last year to December when, markets closed 20% off their highs. But what happened immediately is we recouped those gains over the next 3, 4, 5 months. Like every single pullback is being met with a huge buying opportunity.
But not only in markets, economies, the idea that we have the ability now to en masse around the world break the economic cycle is you're only going to hear that in peak times of the economic cycle, because everybody is really confident that, well, this will never end. How could it end? There's nothing that can go wrong. We have everybody at our back. We have all this good things going on, which is exactly opposite of when things are really bad. At that point, nothing's ever going to get better. Nobody can fix this. Everybody's, sheltered up and in bunkers. Nobody's going to buy anything. Jobs never coming back, but they do. And it's not necessarily about the Fed. It's not necessarily about only the Fed. Fiscal policy, too. We had a major tax cut recently. Now, this is from Republicans who historically have been all about maintaining a balanced budget and, more importantly, low debt. We have an unbalanced budget and we have massive debt. And a lot of that is due to the fact of lower tax receipts, excluding tariff income that's coming in. And the fact of the matter is that we're out of balance. So how long can this last? Well, it could last as long as there's milk in the bottle. Then the baby's going to cry.
When I look at this too, and I want to get your thoughts before we move on to the trade deal, but isn't it amazing how quickly someone like you who's been doing this for over 20 years, how 3 weeks ago the world was ending. Earnings are coming down tremendously, which we're going to get into earnings season, which just started. You're looking at there's no trade deal and everything is slowing, and now you watch TV just 3 weeks later, everyone's like bye. Everything's and I just feel like if you close your eyes and went to sleep and you fell into a coma for since the credit crisis, say 2009. I mean, you would have ignored Brexit, North Korea, oil prices crashing, 2 elections, where Trump got elected. I mean, you could name every single risk on the table, and yet look where we are with the stock market.
But if you also had that Rip Van Winkle approach to things and you fell asleep for 20 years and you came back and you would say, hey, where are we? Okay, stock market's near an all-time high. Hey, check, that's good. Economy looking pretty good. Unemployment at a lowest point in history. No real inflation to speak of. Even though everything's costing more, there's no official inflation. Okay, where should interest rates be? You're not going to say, I don't know, 1.5%, 2%, 3%. You'd probably say 4 or 5 is more of a normalized level. But meanwhile, we have interest rates super low. And the other thing that's really a concern, think about how fast the Fed went from, who by the way, proclaimed that they can project out the next couple of years of what the economy is going to do.
I love that.
Okay. And all of a sudden they're like, oh, wait a minute. We are on this rate. Things are good and we're going to increase rates, and we're on a predestined course to keep on increasing rates. And, all of a sudden, we're going to loosen up policy and start to talk about this, because why? Well, it's all about the stock market. Yes, it's all about economy too. But what didn't they see? And how come they were so blinded by this to begin with that either they were increasing rates for this period of time, or are they wrong now? I mean, I'm not sure which one it is, but you have to take the Fed and realize that some of that credibility has been lost by all this. Now, whether or not you're a believer in low interest rates, hey, I'm all in, right? You can buy a bigger house. You can go out and get loans and expand businesses, do all sorts of things if you can get the credit and at a very low rate. That's good. Expansion of the economy due to credit. Basically, that's the world we live in now. We have an economy that expands and contracts on credit availability, which, our grandparents would be like, what are you talking about? If I got the money, I'll pay for it. If I don't have the money, I'm not paying for it.
Your grandparents are going back to, 70% interest rate, not even grandparents, but in the 80s, right?
I was there. I used to, every 30 days, my mother and I would go to the bank and she would go and put money into a 30-day CD and get a toaster and get like 15% interest rate. And whenever the round number was, in other words, if she got interest of, I'm just picking a number, $532.15, she would give me like $32.15. She'd give me the round number on the end of it. So that's why I would go to the bank all the time with her, right? That was kind of the fun thing. And she would do this on a 30-day basis. And that was a crazy time. But there's a much different philosophy. Right now, we have people that are buying cars, not on a 4-year deal, a 3-year deal. They're buying 7-year deals. No wonder we have we have 7 million Americans right now that are 90 days or more delinquent on their auto payments. Did you know that?
No, I didn't know that.
That's a big number, I think.
Mm-hmm.
So you have the other part of that equation is the lowest credit ratings are the highest velocity of late payments right now.
Which makes sense. And by the way, guys, a lot of people compare like the subprime auto loans to the housing market, which is totally not even in the ballpark. Because when you have your house and this is a risk definitely, but if you're not paying your bill, they come and pick up your car. They're bringing on a lot to sell to somebody else. They know exactly where you live. With your house, people could stay in there for another year. They're not going to get kicked out. They could destroy the asset and just walk away. I mean, it's a lot different when we start with the housing crisis and people say, well, starting all over, look at the auto loans. I mean, it's different. They could take the cars away and they could resell them. They could crush the cars and sell whatever they do, but they know they could repossess that right now within a day, where your house, it's a lot different. All these things stayed in the market for a long time, but I hear you that number is going up. And another sign that, and real quick, because we spent a lot of time in the economy. It's very interesting, but it's another sign of it's Goldilocks, right? I mean, you're going to find things that are good, things that are bad, but markets excel during those times because you're not seeing anyone go on TV. Well, maybe the last 2 days, the market's going to go crazy higher. And you're not seeing, you have, outside the perma bears who predicted crash every single day since they woke up, right. Since they were born. But you're not seeing, wow, the market's going to crash 20, 30%. You're seeing this cautious. I mean, it's kind of good for the
neutral.
Market, I think, right?
The big word is we're neutral on stocks, which has the connotation when you hear it that we're neutral on it, meaning we're not really invested. But that means they're just on par with the S&P 500.
And nobody's going to tell you that because that's the most boring word in the dictionary, neutral, right? Nobody's going to go on TV and say, hey, you know what? Things are cool. We're going to gradually move. No, they're going to have people on TV saying the market, just with extremists, right? That's how you get on TV. Anyway, let's move on because it's a little bit with the economy. Let's talk the trade deal because we both have strong opinions on this. For me,
I'm right. That's why.
You're right, like once a year or something. Yeah. So, no, but I like it because we debate healthy, and it's a shame when you look at politics, it's like if you're one side or the other, you have to hate each other. We don't hate each other. We want to come to the right conclusion.
It's become a sports team theme. If you're a Jets fan, you got to you boo everybody else that comes on the field, right? Mm-hmm. And if you're a Miami fan, which I don't know any right now, if you're a Miami fan, you kind of are fair weather. That's kind of like the independents, right? But if you're, a Chicago Bears team or, a lot of the cold weather states, right? They're there no matter what. They're there. It could be sub, 20 degrees and, the team's losing and they're out there and they're, they got their Wisconsin cheese hats on in some areas, it's crazy. But this whole political mess has become like, this is my team and that's your team. And my team is right. It's kind of disgusting.
It is crazy. And we won't even go even further into that because that's a whole entire podcast by itself. But and I agree. But so with us with a trade deal, for me, and I'll go over this really quick because I'm interviewing you and I want to hear your thoughts on it, is that China really needed to do something. Now, people are trashing this deal already. For me, I think it's a big positive because they got to the table and they're talking. And yes, they're going to sign a few things. And people saying, well, they're not really doing too much. But this is how it starts. This is the first step where they both came back. They both feel like they won. They both reported back to their country, say, hey, this is what we did. We won, and everything's friendly. And what's friendly is good. Now, my argument with China is that it is a short, because if you look at the amount of companies, I'd have to say at least 1/3, I'm probably being very conservative there, have already moved their operations out of China. Because if you're running a company, you cannot afford to have that risk where, basically based on what Trump is going to tweet that day about China, it can reflect whether your supply chain gets disrupted or not, and they just can't go through that risk. So that a lot of them, every time, one of my services, this company pulled a third, they 100% of their business, they're in Taiwan now, Vietnam, they're pushing out of China. So even though this trade deal is done, for me, when I look at China, it's a huge necessity. They need to do this. I understand their culture. But for me, I was like, the U.S. is in a much stronger position. You could see by the numbers how their market crashed a lot more than us. And it went up tremendously when we did sign that trade deal. And that was like last year when everything was okay. We didn't sign anything, but everything's okay. For me, China's getting impacted more, and they have to do a deal. And from what I hear out there, it gets me frustrated saying, China's winning and they don't have to do a deal. They'll never do a deal. You're right. I mean, I understand their cultures, but if they want to destroy 30 years of economic prosperity, they're flirting with something. And I wonder if that's going to impact the culture there, because at the end of the day, people do vote with their wallets. And when they're seeing their wealth decrease by 30, 40%, all because of a little bit of stubbornness, we're not asking them to change culture. They're not asking us to change.
Yes, we are. Whoa. Back up. We are asking them to change culture. Let's wait a second.
You're right. You're right. But we're asking them to be fair. We're asking them to basically say, hey, stop stealing our intellectual property and let's make trade a little fair. Which is a change in culture. So I agree. But we're not asking them to like, hey, you got to get rid of your freaking military or anything, which would be a joke. This seemed doable to me. Like the solution seems doable. But
Frank, you've been in business a long time. You've had people that you work with, and oftentimes somebody will take somebody in and they'll teach them the ropes, and that person excels like crazy. And all of a sudden that person says, what do I need the company that that's taking a big piece of my action right now? Or, there's two partners in a company and one is doing, I don't know, administration, finance, and oversight. The other one's doing sales and all that. Both think that their job is the most important of the two. And what ends up happening sometimes is that they start fighting, saying, you know what, if I didn't sell anything, you wouldn't have a business. The other guy says, yeah, but if I didn't create the products, you wouldn't have a business. Who's going to win this? They eventually may split, and it's not good for either one of them. But you know what? Both sides have to suck up a little bit of the problems that they created. And don't forget who created the China manufacturing dynasty. It was us. We created it, didn't we? We wanted cheaper prices. We wanted quicker products. We didn't want to have to pay workers. We thought that, if we can get this supply chain working really quickly, we can get good, solid, to whatever degree, quality that was acceptable. Look at the iPhone situation, right? What would iPhones cost if they were made back here? And I know they're talking about opening up something in Texas, I believe it is, in Houston, or Austin maybe, somewhere. But the point is that all I'm saying is that there is a give and take to all of this, and forget about the pride and all that. Throw that out the window. But my take on the skinny, partial phase one trade deal, which all of a sudden we have a phase, by the way, we have phases now. We're going we were going from, if we're going to do a deal only if it's a complete and thorough deal and it's a great deal. Now we're at a phase one. What actually happened? My take, okay? Ag purchases, $40 to $50 billion. First of all, I'm not exactly sure what President Trump's fetish is with the agricultural products and why that has to be part of all this, but let's just say that's an important component. Let's just leave it at that, okay? We know why, but let's leave it at that. If you look at history, that is the same amount, and that's over a 2-year period. That's the same, but they flash up 40 to 50 billion. That's the same amount they were purchasing going back the last several years. So there's not much change there. So yeah, they need agricultural products. They'll buy it from us, and that's good. They said, yeah, we'll do that. Buy agricultural products from you. We need that. No problem. Now, again, it's not as big because it's the same as they've been purchasing, generally speaking.
It's not that big. It's not that big at all. Yeah.
Right. So
then I get that. Yeah.
Nothing's on paper. As a matter of fact, it's going to take 4 to 5 weeks to get it down. Already China's backtracking a little bit on this, saying, you know what, we want to maybe get some of these other tariffs off. In my opinion, the only thing that I saw that actually happened here, was that the increase of 5% on the tariffs that were going to be in effect on October 15th were lifted or not put into place. So the only actual physical thing that we could take away from this right at this moment, right now, because there still is tariffs on products all over the place. The December 15th tariffs are also scheduled to go and be increased. In my opinion, I'm not trying to be anti-American. China won this round. They're not doing anything different, but they got a relief. So you may say, well, it's goodwill by the U.S. Okay, that's fine. Okay, I'm good with that. Yes, they did get back to the table. Yes, they did. But the real issues here are not agricultural products. That's nothing. The real issue is that I thought we were going into this to fight was the intellectual property theft and the technology transfer issues, tightening that all up. I thought that was, and balancing trade, right? Balancing, making it a better two-way deal.
Yep.
So we have this phase one. Now, we could spend a lot of time on this, but just think about, game theory. So all of a sudden we give into a couple of things. China's like, okay, that's good. You may increase our tariffs or not. We'll push it off a little bit. We had 4 to 5 weeks to see if we like this. But we flinched again. We have flinched several times, by the way, on this deal. And it looks like that our deal, as I've talked about from the beginning, is going to be beholden to both markets and political ambitions. They don't really care about that as much. Will they get destroyed? They build houses that nobody occupies for hundreds and hundreds and hundreds of miles that they just knock down. They don't care. I really don't think they care. But here's the thing. I want to throw this at you. The big deal is IP theft, right? Or some kind of copyright infringement, copying products, selling it from China, right?
Definitely a big deal, yep.
Big deal, right? Big deal. We both agree with that. I agree with that. But how do we know exactly what's being stolen or not? For example, what about house brands? And what I mean by that is this happened just 2 days ago. I went to Best Buy and I was needed a bait freezer for fishing. One of those outdoor stand-up bait. These are important issues, okay?
It's good. The 1% life, man. The yacht club, everything. Yeah, it's good for you.
Yeah, real life problems. Man, my old freezer wasn't working the way I wanted to. Okay.
Yep.
So they're not expensive. They're $250. You put it outside the last couple of years and that's it. But keeps the bait outside, the stink outside. So I went to Best Buy and I originally had an Igloo. Okay. They had an Insignia on sale. It's the house brand for all sorts of appliances and TVs for Best Buy, right? You've probably seen those. They have TVs and all this. Insignia. So I bought this new freezer. It looked exactly like the Igloo that I bought. And I was replacing the Igloo, which is a Texas company manufactured in, I think it's Katy, Texas. Knobs were all in the same place and looked great. So did Best Buy copy this product, get it manufactured in China, and had it sent back here, or did China develop? I mean, is that like IP theft through China?
I think IP theft is more about how many illegal Apple iPhones and how some of their companies are create. Like if the laws were a little bit, and again, now you're really messing with culture when you're telling how a country how to police people, but. When you look at the movies, right, copyright infringement just everywhere, right? I mean, there's streaming services right now. You can go through China and download every single movie. Let's be real. You're looking at
bags, like Gucci and Prada and all
bags for all of that. So some way that they could, listen, you get punished even further. Again, that's hard to do, right? It's like another country telling us what to do. Hey, you know what? Those people should actually get a minimum of 5 years in jail if they do that. But we want it. That's. When it comes to that intellectual theft, that's where it's hard. It's how do you stop that, and how not only how do you stop it, how do you monitor it?
I don't know.
That's how do you know that that's working if you come with a deal? So I agree with you at that point. Where 2 points I want to make. One is yes, physical only a small thing take, but you got to look at the bigger picture here, right? Because they had a clip of Trump at Minnesota when he was doing, I mean, his rallies are incredible, right? 40,000, I know what people are thinking. But he's actually saying he was going off on Biden's son. That whole thing was in the media now. Again, I won't get political. But one of the things he said, he's like, imagine those guys dealing with China, because I got to tell you, China, those guys know how to negotiate. These are the most difficult guys to negotiate. They know what they're doing. I mean, so you're seeing positive things being sent out at both sides instead of negative tweets like, hey, I'm not going to do a deal with China and China ripping us apart, where I think this is a big step to basically shake hands and say, okay, let's work on this further. And that can't be lost, because that's, at least now we're both at the table, we're both friendly, compared to 3-4 months ago where back and forth, new tariffs are coming out. So I like that they actually sat down and shook hands and said, okay, let's work with this. I think that's a really big step. You're right.
I agree. No, I totally agree.
Not so much has been done. But for me, for everyone to be, trashing this and saying, oh, well, nothing's really getting done. We'll see in 3-4 weeks if anybody like backtracks or whatever. The other thing too that you mentioned.
Now, if they do, hold on a second. If they do, if this deal does, this little partial skinny phase 1 deal gets shredded or reduced further, what's your comment going to be at that point? Let's kind of get this on the table now.
All right. On that point, China's market's going to crash even further. China's dead. I mean, it's not even from the Hong Kong protests, which they're dealing with, but more important is they've already taken a massive, massive hit where companies are moving out of China and pushing their operations elsewhere. And that's really going to hurt them. We also signed a deal where we're going to be able to invest in some of their bigger companies. They can invest in some of our companies. We want more regulation for the companies they have on the exchange, where they're very relaxed. But for me, this deal is an absolute necessity for China, because for us, and this is the point I was going to make, what would you rather do, Andrew? Would you rather be the person creating a product, or the one who's the richest country in the world and buying the product? Because we could buy those products from anybody we want. It's going to be more expensive in Taiwan. It's going to be more expensive in other places. China can't sell their products to anybody else. We're by far the biggest economy.
I agree.
I
100% agree. But it's going to hurt us too.
It is going to hurt us, but it's not going to hurt us as much as it's going to hurt China.
I agree.
They're sitting on goods that they can't sell to anybody, and we could buy these any place, and we're going to pay more. And yes, you're going to see that margins and earnings in some companies are going to be impacted. But we're at a position of strength because we're the ones that are buying these products compared to people that are making these products, which could be made any place. I mean, it's not like they're specialized and need to make. So that's why, for me, when I look at this, and then you throw in Hong Kong, you see the slowdown. I mean, the numbers in China, absolutely
50% reduction in tourism over the last month in Hong Kong. That's a big number. And it's amazing how well their markets have held up considering that.
Yeah, no.
I mean, all things being considered.
And again, when that trade deal's on TV, you're going to see China's market go up at least 2x, 2.5x. If you look back, because I tracked it the last 2 years, when things are good, their market goes up more than ours because it benefits them more when things are good, and it crushes them more when things are bad.
By the way, I agree with all this. I'd like to get a deal done. So you know that I want to get a deal done. I just think that if I'm trying to be objective about this and look at both sides of this, I just wonder if China's going to kind of slow play this deal.
Of course. Yeah.
Until the election, frankly. You know, just keep this rolling, because the hope is, from right now, as we sit here at this exact moment, the hope, if I was on China's side, right, and I'm sitting there and I'm thinking, I'd be like, let's slow play. We've been dealing with this 18, 19, 20 months already. You know what? What's another year? Let's see what happens in a year. And
you're right. It's worth it.
Yeah.
Because if Trump doesn't get reelected, this goes away.
Pretty much.
You're not going to see a China situation, right? You're not going to see someone find. They're going to be like, okay, hey, work everything out. So I could see them. That's definitely on their minds, but it is going to be an interesting period over the next 6 months. I just like the fact that they are talking. We have two great economies. I mean, the whole LeBron situation, it's just, again, I want to get into this because I want to cover earnings next.
One more thing. I just have to say something. It's interesting. The Democrats right now, I don't recall any of them. They're trying to pick apart everything U.S. based, not even focusing on international at all. I don't even remember them talking about any of this.
They don't, but I could tell you, following the Democrats right now, there's a reason why Warren's getting so much traction, is because I think she's the only person, and again, I'm probably going to get emails because everybody has their own feelings, that she's the one that, like, everyone's there, and I feel like they wake up and want to destroy Trump. And with Warren, when I listen to it, I'm not saying I agree with her or whatever, she's more focused on the common sense and not looking at polls. Like the impeachment thing. All right, we're not going to sign it. We're going to sign it. Let's see. All right, when we look at the polls, 51% want Trump impeached. Okay, let's go after it. Like, they're looking at polls too much. And when I look at Elizabeth Warren, I feel like she's kind of separated from everything with her own ideas, whether you agree with them or not. But I think that's why she's really picking up steam, where, she's just not doing the status quo. She's not looking at, it doesn't feel like she's looking at polls. She's telling it how it is, or how she's actually coming up with ways how she's going to improve the country instead of just yelling at Trump all the time. And I think that's a big deal, because that's what people want, right? So
I want to hear some fresh ideas. I don't like that we have record debt. I don't like that we have to have these low interest rates. I don't like that some of the ways that corporations are doing things and all that. I don't like the fact that there's this gigantic disparity in income and wealth, and the cost of healthcare, and the list goes on. So I would like to see a lot of that stuff dealt with, not just the business. You know what I'm saying? Not just the business of America. I'm talking about the business of the average American, not just you know what I'm saying. There's that slight difference. But I don't know. We'll see.
And here's the case. Regardless, and this is how we're going to get into earnings, because regardless of how you feel or I feel, you got to look at the facts, right? You could hate the fact that we have record debt. You could hate the fact that the Fed's lowering rates. You could hate that. That's fine. You can go out with a big sign in front of a Fed, whatever. Just yell at top of your lungs, tweet all you want about that you hate the Fed, which everybody does. That's fine. Yeah, the reality is it's about your money, right? So the Fed's lowering rates, and we know when they lower rate, even with recession, when we started inverted yield curve, people got nervous. The market crashed 800 points because the yield curve inverted for like 3 seconds. It was amazing. Mm-hmm. But people don't realize where you look at the data, the market goes up 15% on average in between when the yield curve inverted and when we actually hit the recession. Nobody wants to talk about that, right? So we want to make money, and if we're not going to make money on stocks, we want to be able to be conservative and pull money out if the market's going to come down. So that leads us to earnings season. We have a Fed that's on our side. We have a president that's very market friendly, that's going to continue through the election until, if he gets elected again or not, which to me seems like a good recipe for stocks to go higher right now. So we're looking at earnings season. I want to get your thoughts, because when we look at earnings drive stock prices. Thus far, I'd say much more positives than negatives. We had Goldman Sachs week. Most of the banks reported great numbers. Healthcare companies reported really good numbers, from what I'm seeing. But with that said, as you know, because you covered this, Andrew, these estimates were lowered pretty close to around 4% going in between the quarters, right? You only see that from the sell side research firms where they're upgrading and downgrading. That's when you see it in the news. You don't see these notes that are putting out to clients saying, hey, we're lowering our target, we're lowering our estimates. Now expectations heading in are super low. Mm-hmm. But when you look at the underlying data, you're having companies beat because expectations are lower. But at the end of the day, this is going to be the third quarter in a row where we're seeing negative year-over-year earnings growth. So what are your thoughts about earnings season? Do people care about that, or they just want to see them beat the underlying number?
I've talked about the incredible change to the market dynamic where we have bad news is good news is good news, sometimes good news is bad news. That's all related to the Fed. Then we have companies. Companies are smart. Listen, you don't have multi-million, billion-dollar companies that are out there on the public markets, generally speaking, that are stupid people running the at the helm. What they'll do is they'll shift production or change pricing or do something internally about cutting expenses. They know they have to do what they have to do. They're looking at this in real time. It's not like they have a lag on this data. So they're making adjustments, and companies are obviously with bonuses attached to how the stock price does. Companies are very sensitive to this. So you have mechanics that are also at play. I've talked about this 1,000 times. You have the buybacks that are really funding and fueling a lot. Buybacks are down a little bit this year, but funding and fueling a lot of what's going on here, or a good part of that. While you see that money markets are at an all-time high, the retail investor doesn't really want to be a part of this. At the same time, you have to understand that there is a record number of people generally working, right? They're putting their money into their 401k every paycheck. That's going into, generally speaking, equity funds or at least markets. And that is also providing a good amount of underlying strength for this. Then you have a lot of robo investing where they're going to do a rotation. If stocks are down at the end of the month compared to bonds, compared to whatever, they're going to rotate back in. So you get that kind of mechanical buy the dip going on. And of course, the Fed, is always there. And President Trump tweeting up a storm about how great things are. So it's interesting, though, that a lot of what we see is discounted looking out further, that this is the worst it's going to get. This is just because there's comparisons against when there was new tax cuts that were put in, and companies really accelerated through that on earnings. And, our companies are resilient. And again, we're in a market cycle that basically is busted, where we're not going to see these massive drawdowns due to recessions, depressions. It could be a technical matter that lasts 2 or 3 months. And, once we hit that number, once we hit that 20%, okay, the bear market's here, therefore it's over. That's the concept. A lot of stocks are very constructive in terms of their pricing and their charts. The one question I have, though, is are we going to be setting this up very similar to what we've seen in past earnings quarters, where you have a little bit of the, kind of people getting a little upset and despondent over the fact that earnings are coming down. Then it's like euphoria because we beat, but then everybody is kind of the after party's like, not feeling so good because those beats were really on, maybe some on lowered bars. And therefore, there is the effect after the fact where, maybe things aren't as good and we shouldn't keep bidding this up. However, it seems that, even with when we saw Goldman Sachs have a pretty awful report that I saw, stock was down $4 pre-market into the early morning. It was down. It ended the day in the green. Now the market was up, so that pushed it up in general. People are just saying, you know what? I don't think I care about today, tomorrow, or even next month. It looks like there's a longer term involved, that they believe that, hey, you know what? Long-term things are going to be good. And don't forget that those advisors, those investors that now have money that are in their 30s only live through the good times in the markets. So therefore, they believe that buying the dip is always a positive occurrence for them because they have no history. I saw somebody talking about, oh, look at this advice we see here. It's just, save less, do this. I said, you know what? You're obviously a young guy that thinks you have to be complicated with computer models. Go back, ask some older folk that have been involved this a long time. And it's not as difficult as you make this. And I think there's a lot of fresh ideas that are out there from people that have never been through an economic cycle of any sort, only the good times. And I think that's kind of affected things. So to sum this all up, earnings are okay. They're not great. I don't think we should be at all-time highs from what I'm seeing from earnings. Even like a JB Hunt that did not have a good report, actually was in the green last I looked today. But, how much higher can we go? A lot of metrics that say that we're a little bit pricey. Some say, well, if you take that and you discount that for the fact that how low rates are, not that pricey on the stock market. But it is pretty amazing that we have all these headwinds, the outlook near term that's questionable, and all the things we mentioned, that there really doesn't seem to be any kind of concern. The VIX at 15 was at 22 last week, came down to 14.5 yesterday. So
yeah,
it seems like the desire to move markets up, to move stocks up, to own these companies is very great. I don't know if that's going to change. No reason to fight it.
Yeah, and plus, when you're looking at the rest of the world, you could say, well, the U.S. is seeing slower growth. We're in much better shape than 95% of the developed and emerging economies right now.
But even Europe's markets haven't really crashed. Look at how awful Europe is doing in terms of the economy and their companies, and their markets are still holding up pretty well. So there's something else going on here. It's the only game in town.
No, definitely a good point. So, and it is going to be interesting to see the rest of the earnings. If the guidance is always key, guys. I mean, you could miss earnings by a mile, and if you raise guidance, your stock's going to go higher, and vice versa. Like you can have an amazing quarter in past 3 months, but
right,
going forward, if you lower that guidance, your stock's going to. And I don't see them raising guidance because there's still uncertainty, in the marketplace. So it is going to be interesting. But I have to say, this is someone who's covered earnings seasons for 20 years plus. This is one of the times that I've seen one of the most pessimistic outlooks going into earnings season than ever. Usually people are like, oh, they're probably going to be, people were just trashing low estimates. Earnings season is going to be terrible. I mean, it almost sets it up where sentiment is so bad with these things that, anything they report, if it's in line, like you said, JB Hunt, a couple of other companies have reported that not too good. And, by the end of the day, at the end of the week, they're not really getting crushed. So
but stocks didn't get crushed either, Frank, with all the pessimism, which is really interesting because I think people are like, you know what? It may be, I'm not willing to get rid of my stock. It's been good for me. Things have been going well. Markets seem to recover all the time. I'm not selling. I think the analysts, even with their downgrades, we didn't see the kind of move on stocks on a big picture, not individually, but on a big picture that you would have expected with all this pessimism. There really wasn't any.
Well, you know what? If you look at the major indices, I would say yes. But if you're looking at the underlying, because I have a small cap newsletter and I have a large mid cap newsletter, right? And the small cap newsletter, a lot of these companies reported great earnings the last 2-3 quarters, and they're down 20% off their highs. We're up on a lot of those situations, and some of them, we're down on a little bit. But small caps have gotten murdered. the discrepancy
caps,
between small caps and
yeah,
large
big,
caps have been the
big.
biggest in 17 years.
Enormous.
Which it makes sense and it doesn't make sense because you see China trade and you're like, well, small caps don't normally have that much international exposure, right, compared to the big companies. But it was kind of like a risk-off trade. And what did you see? Defensive names, cyclical names do good. Apple held up. Some of the big names held up a little bit better, which held the averages up. But when you look at the underlying companies, I mean, I did a screen a week ago, and it was 30% of the companies in a Russell were down more than 15%.
Yeah,
a year to date. And I was like, whoa.
Yeah, Russell 2000. Listen, when you have Macy's up today on a bad retail number, okay, stock markets were down. They turned around, went positive so far today. You see things like, the continuation of Apple at all-time highs with the fact that there was concern even after their iPhone 11 announcement that they were lowering prices and margins were squeezed and they got the problems there. And they may also get the December 15th tariffs, all-time high on it. I mean, it's telling you there's a little bit of excess, I think, excitement in the markets. That's fine. That doesn't mean it has to come down either. But it just seems like there's a little touch of overconfidence in markets right now, considering all the things we saw. We saw a bad ISM, markets came down. We saw the services number, not so good. But then, a week later, it was totally rectified. So when you see a day that you see numbers come in that are really poor for the economy and markets just turn around and stocks that see bad reports and they go green, it's telling you that there's more of an algo trade going on. There's more of a technical trade happening. Again, it's not necessarily bad. It's just what it is. So kind of like take it over time and let's see at the end of the quarter how things play out. Right now, I'm not really hearing a lot of negativity on the outlooks. Haven't seen anything. That's where the expectation was for real problems, I think.
No, definitely. Yeah, I agree with you 100%. So let's move on to your stock picks, which people love. So last time you were on, you talked about shorting Planet Fitness, which dipped, and you took out 14% profit off of that. You also were long Wyndham Resorts, which actually went up and came down a little bit, but it was a good trade. And Luckin Coffee, which is you're trading in and out of, and it's a little bit higher than the levels that you gave us. But out of those three, I guess, and because short Planet Fitness, it was long Luckin Coffee, and Wyndham Resorts and long. Any of those trades that, it looks like Luckin, you're still in a little bit, but
in and out of Luckin Coffee, trying to hit it at the 19, get out of it 21, unless it really spikes, does something, kind of use 19 as my lower band. Matter of fact, I think I mentioned last show that, Luckin Coffee, I like the idea that a potential for an anti-American sentiment in China may have the people that got hooked on Starbucks starting to go for a house brand, if you will. And that's back and forth. So, but we were trading it pretty successfully back and forth between that range. And that's a 10% gain from 19 to 21. So take that every day, right? And let's not forget about DocuSign that I gave you a few months ago that kind of dipped when he first got it, now at all-time highs.
Yeah, not every, IPO is terrible. We've seen a lot of those things come down. And you know what? You had an interesting conversation before. And that's why I love, one of the products we have is Dollar Stock Club, where we take, picks from our guests. And sometimes they're online and a lot of times we discuss, one of my guests, probably same with you when you're interviewing, like even before and after the podcast, we talk about different things. And sometimes we'll have ideas then. You were talking about Peloton. Not so much that you got to buy the stock, but talk about it because you had an interesting story that surprised me.
Yeah. So Peloton, I got a few friends that have the Peloton bike and I'm like, well, how do you like it? They're like, well, I love it. I'm like, oh, what's to love about it? Well, you get the guided tours and you got the classes and they really push you and all that. And and then all of a sudden one of my friends pulls out his smartphone and he says, hey, look, I even have this app. I'm like, well, what does the app do? Well, if you, let's say not on a bike, a Peloton, you go to the gym, you can kind of do a class on your iPad. Oh, interesting. He said, if you don't have a treadmill, they have some treadmill stuff. They have things like stretching and yoga and meditation and classes that you could either attend or go and look at the recorded ones. And I've been running. So I said, let me try that. They have an outdoor one, audio only. So I put on one of the walk, jog, run ones to check it out, see what was going on. And it was kind of interesting because it really seemed to, I didn't really dig the music, frankly, but the instructor was pushing me the whole time. And, I could have just said, okay, I'm tired, I'm stopping. But, they were kind of constantly in your ear telling you what was going on. I thought the app was pretty cool. 2-week free trial. So I'm doing a free trial of it. That's $19.95 a month. So if Peloton can I think grow this and really make this a really good central piece and used for people that don't have bikes or don't have any kind of equipment at all. It could be an interesting little thing. I think the app is really cool. Stock, I think it's possible that it's also very easy to replicate. There's the fly or flywheel or the flywheel. There's Nordic Track. There's a couple of companies that are out there with competing products. But if they can really develop a really good database of instructor-led programs, I think that's a cool thing. And if anybody's into exercising, I would definitely check out the 14-day free trial of this thing.
Now, the biggest surprise of everything you said there is that you're running. Are you running or are you walking?
Run, walking, jogging. I'm actually,
good.
I'm jogging and I'm running, and I'm old enough that like, if I'm tired, I'm like, I'm going to take a couple of seconds to walk a little bit. I used to just push myself through the whole run. So I'm not marathon speed, but whatever, like 10-minute mile.
Hey, that's better than me right now. But
well, you're Mr. Gimpy right now. You got a leg problem.
Yeah, everything's good though. Everything's cool. I'm walking around. I'm exercising, so it's getting better.
Oh, by the way,
slowly.
Hey, thanks for sending me that picture from right when you were out of the hospital through text. I really appreciate that. That was a beautiful wound. Beautiful.
You know what? So many people are like, oh, I want to see the, and I actually posted on Twitter. I said, if you don't want to see it, I'll show it to you. So it was a big, I got my hip replaced 3 weeks ago, and I'm walking without a limp. I feel great. I just saw my doctor. She's like, listen, just take it easy for the next 3 weeks because the bone meshes with the metal that's in your leg and everything's going to be good. But it's an amazing surgery. I mean, the success rate is very, very high. It is a major surgery, but you got a brand new hip, which is really cool. And most of this takes place with people that are 70 years old. So, it's a longer recovery. For me, it was about, I used a walker for 1 day. I didn't have a cane or nothing, but I'm younger and not too many young people do these surgeries. So, I asked my doctor, I was like, how long is this thing going to last? She's like, we don't know since we only do this on 70-year-olds. I was like, oh, that's great. Thanks a lot, Doc.
Yeah.
But she was amazing. Now let's get to the final part of this because you have some interesting picks. One of them is a company I never heard of, PagSegura Digital. You can talk about that one. But also one of the things that you sent me is you want to short Facebook. I'm not hearing that a lot. So why don't you talk about those two?
So these are two kind of against the grain in a way. Let's start with short Facebook. First of all, I think that the Hope trade is helping them along. They have major pressure. I think the political headwinds, it's going to be a lot within the political cycle. Even though they're talking recently about their Libra cryptocurrency concept not falling apart, we're seeing companies like Stripe and PayPal, MasterCard, and a whole host of the big names bailing. And the reason is that they don't want to have any scrutiny. I'm like, wait a minute, you got into this thing, you thought no governments could maybe look over this whole deal with you creating a new currency? What were you thinking? But, the company's still loved by advertisers, not a lot of opportunity to get targeted advertising. But with them closing up a lot of the loopholes, with putting on a massive amount of headcount in terms of paying people to, buckle down on security, and the fact that they seemingly can't get ahead of it anyway. There's a new thing every week or so about that. Meanwhile, the stock's been holding up really well. I just think that there is the opportunity, may not be the shortest of term of trades, that Facebook is a bit overdone and there may be some fallout from some of the things that have gone awry. And it makes sense to, if you have a major position in growth stocks, that Facebook would be one that I personally am shorting. I've shorted successfully, moved out of it from the 200 range down to the 170 in change range. Just reshorted it recently, and just think that into the election cycle is a major headwind for this company. It's a major target.
I want to say this about Facebook because, and it's true. This might be a fantastic trade, but when it comes to Facebook, it's one of the only companies I know of ever in history, following companies that had to change, I won't say their business model, but their system, right? You had political pressure, privacy concerns, and they said, okay, we got to put more measures in there for advertisers. And advertisers came in and said they had extra steps to take to get their ads posted. We know this because we're in the business as well. We advertise on Facebook. There's a whole process that people had to learn. And for me, I was like, wow, Facebook's definitely going to get hit. And the next quarter and the following 2 quarters, they reported blockbuster earnings. And I'm like, it's the only company I know that actually made it a little bit more difficult for their advertisers and change their system. I just thought it would be, not a long-term headwind, but just a short-term headwind. And they didn't miss a beat. They were just, and the reason why they didn't miss a beat is because 20% of the world's population is on Facebook. And it's still the greatest advertising platform in the world where you're getting the best results because they know exactly people check in. They know exactly where you are. They have pictures. I mean, they have all algorithms. They know exactly what you're going to do. We all have patterns. We all do the same thing every day. They know everything. They know, and the advertisers, hey, you want to advertise your Starbucks? Here, there's 3 million people in Starbucks right now. Or you could put a commercial on Comcast and you have no idea who's watching.
I totally get it. No, I totally get it.
So that's one of the things.
They've also been constantly talking about the expense expansion, dramatic, and a fall off of their overall earnings for the last couple of quarters. The question is, when's that going to hit? So I'm thinking it's about time.
That's a great point. Yeah, no, that's a great point. But for me, I was just surprised that happened. And a lot of that's factored in. Look, it's not even trading that far off its 52-week high. But for me, I was just surprised. But a lot of that could be factored in. It's interesting. I like to follow that trade. And real quick over the other stock that you were talking about, which is Paxagura Digital, I think it's called.
Yep. It's a Brazilian fintech company. We've had it for a while in our managed growth strategy. It's actually made it through screens for the last couple of quarters, which is hard to do, especially because in our screens where we whittled down about 5,000 stocks utilizing fundamental, technical, and quantitative analysis, we've gone from about 60 stocks down to 30, which is really interesting because companies are not able to compel us to show us that, well, they have growth of earnings, growth of revenues, growth of margins, and all those other things. Now, this company has done so and really well. The Brazilian fintech market is really expanding very quickly. And obviously, there's a lot of potential with some of the current government initiatives. The company's been doing really well. PAGS is the symbol. They did a massive secondary this week, and they pre-announced their earnings. Stock was down about 18% on that. Finished the day at about, I think, down 13% or so. Came down a little bit again today. It just seems to be when this kind of all gets through the market, and then maybe there's going to be that, hey, what are they doing with that secondary? And even though maybe some of it's selling shareholders and all that stuff, and not taking money in, and there is dilution of the shares, a lot of times that we've seen these secondaries, it definitely keeps the stock down, any stock down for a while. And then when the earnings start to come out and things look a little better, cleans up, starts to ramp the other direction for good quality companies. So just something to think about.
Nah, good ideas there. So, Andrew, I want to thank you so much for coming on. I mean, I had some personal problems I'm dealing with last week, and we always have this unwritten pact that, hey, if we ever need each other, we'll drop everything and we'll get on each other's podcast, which is really cool. So I appreciate it. And it's perfect timing anyway, because we both have strong opinions on China and trade, and that deal just got done, and a lot of economic news coming out in earnings season. So I love having you on. We can go anywhere and talk about everything. So I just want to say that I really appreciate you coming on short notice. I love you. We've known each other for a very, very long time.
Forever. So, hey, by the way, I did a little research. Somebody was saying, hey, you know what? Somebody said to me, we just had our anniversary for our podcast for X amount of years. Do you know the first episode of the Disciplined Investor podcast was in March of 2007?
Yes.
March of 2007.
Yeah, because I started doing it a little bit after you. And I think 2008, I started at the Street, and that's how we got to know each other. You at the Street, and then I think you were doing interviews there or something. I don't know if you did like a video there or something, but then
I was on for something. But you know what? I'm saying it. I'm the OG of financial podcasts.
Yes. Yes. I mean, it's funny because people come to me and say, wow, you've been doing this for over 10 years. I was like, I've just been doing it for 11. So, I say that. I don't say that to everybody. I just say it to that personally. So I'm like, yeah, I'm a pioneer in this industry. No, actually, you're the pioneer. You've been doing it even longer. And it's amazing how everyone in the world has a podcast now, right? It was a platform that's like, what is it? A podcast? And now it's every show gets turned into a podcast.
So boring.
It is. It's tough. I mean, I know you have to have I try to listen to some of them, and there's very few that actually, keep my attention throughout the whole thing. And that's why I'm so surprised everybody listens to you or me for such a long time. I'm like, wow, that's so surprising, but it's cool. And I guess we're doing something right, and it's nice.
We are. Yeah. Yep. And by the way, one of the things that we do, just to mention, because I know you're going to ask, because you always do, but you can find us over at thedisciplinedinvestor.com. We have 3 unique strategies. One is our global allocations, which is more of a traditional strategy. Our managed growth strategy is a long short. If you think, hey, you know what, maybe markets are not setting up really great, I want to diversify and I want to have style diversification. This is the kind of the place to do that, because you get the opportunity to have long positions as core. We hedge around, we do some trading, we do swing trading and all that. We could utilize options. A lot of different things happen there. So it's a non-correlated investment strategy within your other strategies. And then we have even a robo-esque strategy called Investology with an E. And that is a advisor crafted and technology enhanced that a lot of people ask us for because it's a $10,000 minimum investment, which is, a low enough bar for most people to get into.
No, that's great stuff. And if someone wants to learn more about you, I'll ask it after you said everything.
Just email me at Curzio@gmail.com. You could go to thedisciplinedinvestor.com, listen to the podcast, the Disciplined Investor Podcast, and then, of course, available at any of your favorite podcast directories.
Sounds great. Awesome, buddy. So listen, thanks again for coming on. And of course, I'll have you on probably in a couple months from now.
And feel good. Looking forward to you getting back in the groove with that leg and all the other issues that are surrounding you. I hope heal fast.
Thanks, buddy. Thanks, man. I appreciate it. And I'll talk to you soon.
All
right, guys. Great stuff from Andrew. Nice little podcast. I usually do an educational segment, but we really covered everything. We really went into details with earnings season. I was going to do an education segment on earnings season, but a lot of that was covered already. And, try to keep this to around an hour. I don't want it to go an hour and a half. Believe it or not, some people love most people love longer podcasts, even though everything traditionally in media, they say, do short videos, do 3 minutes, 4 minutes. Every time you do long videos, I guess you got to keep the interest for people, right? You just can't be boring. But it's funny how many people love it longer, but I like to keep it within an hour. And, we covered a lot there. And I love Andrew coming on the podcast. Fantastic. I said earlier, we have this relationship where we can go on a podcast whenever we want, last minute and stuff. So I appreciate that he did this. Dan Fitzpatrick's probably going to be on next week, if not the following week, but we've been talking and things are really, really cool. And he's a guy that I love. He's witty. He does a stock market mentor, is his site where he teaches people how to trade. Just a remarkable guy, remarkable person. He's really there for me at the Street.com days and someone that I like. And he's very outspoken, very entertaining. Most of you are going to love him. Some people will hate him because he goes into politics as well. But he's going to be on in a couple of weeks. I love reconnecting from people in the past, especially the emails that I got from you was really cool. Just, hey, is it Dan Fitzpatrick? Or is that, you named like so many of the older players that were on my podcast when I was at the Street. Believe it or not, guys, I used to do a daily, like an hour every single day when I was at the Street every day, which is really cool because I knew more than anyone ever because it was reading the Wall Street Journal on the way in, working with Kramer, going over every stock sector and everything, to doing a podcast, interviewing people, 2-3 people a day sometimes because we had a big news department. You knew everything that was going on. It was fantastic, but it was a little crazy. I like doing the weekly one much better. Just too much. Major commitment to do it every day. But thanks for Andrew coming on. And guys, I say it all the time, this podcast is about you, not about me. So let me know what you thought. FrankCurzioResearch.com. That's Frank at CurzioResearch.com. So guys, really appreciate all your support. If you can, say a prayer for my mom, hoping things get better. Of course, I will update you on our progress. Again, it's a little bit better, still not out of the woods. But I love you guys. And I love telling you guys everything. You guys know everything about my personal life, which is really cool. So again, appreciate all the support. I'll see you guys in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.